What is going on, y'all? Cheers. Doing a little coffee break, and we're going to jump right into this video. It's good to start off with a big slurp of caffeine, drugs. You two might not like that. Okay, so let's just jump straight into this. Right now, we are getting rejected off this level we talked about in the last video, which is roughly 88K. No surprise there. You can see there's a decent amount of confluence, or at least we've been there a few times and had trouble. But the interesting thing about Bitcoin, and I'm sure you guys are starting to notice it now, not that you weren't before, but we are really starting to decouple more progressively or more aggressively, I think, as we go, day by day now. So interesting thing about Bitcoin is it's right above its 200-day and 50-day moving average. That's pretty crazy considering the S&P 500 is like, way away from it, a mile away from it, so to speak. Also the NASDAQ. We can see on our, I guess this is BTC Pearson correlation chart that the correlation with gold is starting to increase, and you're starting to see, at least recently, starting to see a drop here in terms of your correlation with the S&P 500 and NASDAQ. Now, this chart really doesn't do it justice, does it? It feels a lot more decoupled than what this chart suggests. And that's why I think people will kind of miss it. It's happening slowly. That's what I was trying to articulate in the last video, is like people might miss that it's actually decoupling because it's happening slowly. My true north for the decoupling, okay, or relative strength, whatever you want to call it, is Bitcoin versus the S&P 500. And as you can see, this is getting close to all-time high. If we look at the NASDAQ, damn near at all-time high. You got this wick here that we had back in January. I think that was Inauguration Day. But as you can see, these charts are very bullish, clearly. And as you saw on that correlation chart, that you're starting to see a bit of a coupling or recoupling, so to speak, at least a little bit with gold. And this is ultimately the final boss. And I got this chart here, and this TA is meaningless here. But I really want to point this out, that this is the final boss. Like, we need to see constructive price action versus gold. And I said I wasn't going to go on the high time frame. I'll go back to the low time frame. I may be all over the place here, but we have to see this show some strength versus gold. Why is that? It's sort of like the same thing as ETH BTC in a way. Not in that it's down only, but that why would you want to buy too much of Bitcoin or too much of ETH if it can outperform Bitcoin? Bitcoin's more liquid, less volatile, so you're taking less risk and getting more upside if you bought Bitcoin over ETH. The same sort of principle does apply here, I think, to Bitcoin, in that for people to really start to add aggressively, not only do you need to outperform the S&P 500, which is looking like that's more and more likely going to continue, but you would like to outperform something that's way more liquid. Gold's about 13 times the size, or last time I checked, it may be different now since gold's been ripping. But a few weeks ago I looked and gold was like 13 times the size of Bitcoin. So it's 13 times the size. You would want Bitcoin to outperform it. Does that make any sense? Because you take less risk with gold, right? But the trade-off is, if you do buy Bitcoin versus gold, you hope that it has outperformance to the upside. So far, as you can see with this chart, that is not the case. So this is the final boss. We do want to see this turn around. Hopefully we can find a bottom here. But I just wanted to throw that on your radar. I didn't mention it in the last video that while these charts are looking good, this is the one that I want to see turn around here pretty soon. But we'll take baby steps. We'll take what we can get. Eventually, I think we will get there. Bitcoin on the lower time frame. Let's go back to that. As you can see, we're getting a little bit of resistance, or maybe quite a bit of resistance, depending on how you want to look at it. Here at this roughly 88K level, we've been there before. This is your 100-day moving average, lined up with this a bit of a volume node here. I mean, it's nothing like huge, but you have been there a few times and gotten rejected off of it. We talked in the last video that if we were to break higher, this would probably be another chop solidation point, and I think you will see that. How I look at positioning here, or trading in terms of this range, or what decisions you should make, really depends on the time frame. And this is why I think we argue so much on crypto Twitter, is people are not talking on the same time frames, right? Like, for example, if you're one of these like guys who just buy and hold, you don't even care really what's going on here, right? You're like, okay, 85, 80, 87. You just don't really care because your targets are like, 150 plus, right? But for a lot of guys who are going to watch this video, they trade for a living, or they want to get to that point. They trade more frequently, and that's why we have to address what time frame we're talking about. So for the guys that are they're not trading, and they bought some spot down here or anywhere close to 80, I'm like, look, just walk away. Like, just don't even look at it, because honestly, it's a great place to add, in my opinion, going through the next few years. And there's really no point of doing anything else. You added, maybe you add more if that's like your strategy, but there's really nothing more to say to these that kind of strategy. Is you want to hodl, and if it goes back to 80, maybe you add more. But I'm not going to tune the video to that sort of frequency or that time frame, because it's boring, number one, and I'm actually a day trader. At least I do take a lot of scalp trades. I've actually gotten a little bit on the higher time frame lately because of time, wanting to travel more. But let's get a little bit lower time frame, more swing, maybe closer to scalping, but not quite. And this is how I look at it from a more lower time frame perspective. Okay. If you get anywhere close to 80 to 82, that is a place to be adding to longs. However, this is not a place to add to longs on a lower time frame. We can see that open interest is starting to jump here. It's not as bad, I think, as some people may think. I have seen a lot of people comment on this. This is Binance. Maybe it's a little bit heavier. Let me see if I go to the aggregated. I mean, it's a decent jump, but I wouldn't say it's that crazy. Let's actually look at how big it is. So it jumped like 12%. It jumped like 12%. Now it's up about like 6. I don't really see that as that big of a deal. So not going to really spend too much time on that. Don't really care that much. We can probably see that funding is also not really that much of a problem. This is obviously more dynamic, and funding is actually trickier than most people think, but don't really see anything there as well. So I'm just looking at this really just on the chart here in terms of the confluence I'm going to use. And I think, again, this is not the place to add. This is a range, right? Let's just take this as a volume distribution or whatever you want to call it. This is sort of like the value area low right here, kind of. And then this would be sort of like the value area high, somewhere around 86. And then obviously these are kind of like deviations, if you want to look at it, from like a more classical view or whatever. This is where people are going to want to start to be taking profit if they're trading this range, right? So anywhere around here, right? I should probably change that color there. Something like that. Like that is sell kind of area for people. I'm not selling there. I'm just saying this is definitely not going to be where I'm going to want to add. And conversely, if we're anywhere between like 82 to 80, I want to be buying. Okay, so this is kind of this is a very simple way to look at it. This is the POC, so I don't even want to touch it or do anything when I'm closer to 84. That's like the middle of this, as you can see, kind of. It's a little asymmetrical here, but you kind of get the point, right? Like if you're trading, this would be not quite scalping intraday, but like a weekly time frame. This is where people are going to want to add positions, and this is where people are going to want to sell until you at least break out of there. And I don't see any edge there. We would need some sort of catalyst, I think, to do it very easily. Although this decoupling narrative is strong, I'm not so sure that's just going to blast you off to 90. But like I said, just to say it one more time, I'm holding my spot that I added lower. I want to add more, but I want to see a pullback closer to 82 before I would do that. And if it doesn't happen, great. That's fine. It goes up and I'm still happy. But I do have rules, and I do think it's smart to follow basic common sense trading rules, which is this is a high here on a lower time frame that you probably don't want to add a position. If anything, you'd want to take a little bit of profit. And some people will do that. That's pretty much all there is to this little range we have here is, 87 to 88. I think you're going to see some selling. Again, your 100-day moving averages there. One thing that will be interesting is to see if you could hold this 85K level. Okay, you have this 85K level right here. That's where your 50-day and 100-day moving average is. You would want to see that hold if it comes back to it. I think you probably will see that. Again, I don't think you're just going to blast off here. I hope it happens, but I'm just trying to be realistic. It could get choppy and sideways. If we look at the S&P 500 today, it obviously had a pretty bad day. It did have a decent bounce towards the end. But as we can see, this is very heavy still. I don't have a lot of strong opinion on this other than I do think that you will. I don't think you're going to make much more of a low on this. That's all I'll say. Maybe slightly lower, maybe slightly above, or maybe a double bottom. But I do not think you're going to make a significantly lower low. I just don't think, at least right now. And it's kind of interesting that a lot of the people who are super bullish at the beginning of the year are now like all really bearish. People are about as bearish as I've ever seen. It feels, like COVID basically, where people are just like, this time is different. Nothing's going to fix the market. It's over. The geopolitical order is breaking apart, and this is going to have this is going to be a lost decade. We're not making new highs. The contrarian in me just can't help but be a little bit bullish because a lot of these people are just now subscribing to the fourth turning idea or the fourth turning thesis. And they're all thinking, this is basically 1929 and all this kind of stuff. I just don't believe that. And I think this time isn't different. Nothing ever happens meme is going to win again. Now, I think this will take time, but I do think that Trump is practical, and we're not going to get too much into the politics there, but I think he's practical, and by the time we get into next year, no one's going to be talking about this. I really don't think people are going to be talking about this. We'll be talking about something else. There'll be new things to worry about, but I don't think it's going to be this. So, yeah, I'm actually starting to get cautiously bullish on the stock market. I think it's going to take time. I think it'll probably bottom within the next few months. But I am looking forward, I do think that you are going to have higher prices for the stock market as we get closer to 2026. Maybe it's into 2026 or maybe Q4. But I think a lot of confluence or the stars are sort of aligning that everybody is way too bearish here. You have to do the exact opposite of what you think you should do in these kind of situations. I mean, there's a reason why most people don't make money trading. They sell when they're not supposed to, and they buy when they shouldn't, right? So what a lot of guys are going to do is, wherever this thing bottoms, they're going to be chasing prices higher. As you saw here, it had this bounce, and people were chasing up here. It's going to go down, and they're going to short, and you've seen this before. right? You've seen this before where people don't want to buy when they should, right? When things are way cheaper. Now, to be fair, you can make a case that a lot of stocks are not that cheap yet. Well, they never really got that cheap in 2022 either. I remember the experts in 2022 right around here saying, nah, this is going to go low, or you're not at those good prices yet. Like PE ratios, they're not quite there yet. Market didn't give a shit, and people bought, and you went higher. I think it's going to do the same thing. Again, I like a double bottom retest here, or slightly lower, maybe slightly above. But I'm getting pretty bullish, man. Again, the people who were not bearish when they should have been are now bullish. And a lot of people who were bearish up here are now like, all right, we can sort of gradually get more bullish from here. It is that simple. At some point, positioning and the flushing, the washout of positioning gets people think that there's macro reasons for it. And don't get me wrong, there is a lot of macro here. There is a lot of problems. Okay, but a big part of this sell-off is just a washout. People got, their bell rang. Okay, when the prices started to go down and they got scared and sold, eventually you run out of sellers. I'm not saying you're quite there yet, but you kind of get the point. Like, eventually you're just going to have a lot of people who have common sense and are not fear-mongering, going to say, all right, it might be time to buy. That's going to overpower it at some point. And I think you're going to have a nice little bottom over the next few months going into 2026. I don't want to spend too much time on that. If you're in some of the group chats that I'm in, we can go into that. But don't be a retard like some of these bear tards. They're gonna bear hole themselves into missing a really good opportunity, I think, going into the next few years. Almost no one is bullish, guys. This time is not probably different. All right, I think that's all we're going to cover today. And until next time, happy hunting, friends.